Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I cap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and it's the 14th of February 2025. Alright everyone, let's get into it. So apologies for missing Wednesday's episode, everyone. I just ran out of time to do an episode on Wednesday, but hey, I stuck to the 3 episode a week cadence for a little bit there, and I'm going to get back to it next week, and there is an episode today, of course. So yeah, still trying to keep up with the consistent episodes here, but again, apologies for missing Wednesday's episode. But let's jump into the news now. So the staked ETH ETFs are coming. As you guys know, this has been a big topic of discussion in the Ethereum community as of late. I kind of talked a bit about this the other day. I gave kind of my general view on what I think the staked ETH ETFs mean for ETH, the asset, Ethereum, the network, why I don't consider it to be like a huge deal, and that these mega institutions like BlackRock and others are going to suddenly overtake Ethereum and be able to control Ethereum. Ethereum governance is far more complex than that. There's far more nuance to it than that. And Ethereum staking is far more complex than that as well, because we have slashing, right, which is an in-protocol kind of punishment for any funny business. But also, at the end of the day, these networks are secured by social consensus as the kind of consensus of last resort, you could say. The whole point of getting kind of a consensus mechanism, or having a consensus mechanism in place outside of being kind of Sybil resistance like proof of stake and proof of work, is to basically never get to the point where you have to invoke social consensus, because invoking social consensus is extremely messy. No, I mean, no one quote unquote really wins. There is damage dealt on all sides of the debate there. But really, what we want to do is make sure that we don't get to that point, basically. We don't get to the point of having to invoke that. And I think that Ethereum Proof of Stake does a really good job of that. I think that it's in everyone's best interest economically, but also just if you want to, if you're building your business on top of it, so not do any funny business. And in terms of like nation state attacks, that's a whole other thing. But at the same time, I've gone through that before, how costly it would be for a nation state to even try and, I guess, like stop finality on the Ethereum network. But they could always do things like seize validators from different US-based operators. But the last time I checked, most of Lido's operators aren't in the US, so that's the biggest staking entity, obviously. And also, Coinbase is the biggest staking provider in the US as a single entity, I believe. And they're not not under 10% still, I think. So they're not even close to 33%. So in order to actually take over enough validators to prevent finality would be a pretty tall ask, even for a nation state, even for a very well-funded nation state. And on top of that, it would be a very tall ask, basically an impossible ask to get to 66%, which is what would, send the network offline. And then the worst, if that actually happens, the worst case scenario, we basically invoke social consensus then and socially fork out the attacker, and away we go from there. As I said, lots of damage would happen in that case, but the network would still go on, and network would still survive that, even though there's a lot of collateral damage from that. But I'm getting a little bit ranty now about Ethereum Proof of Stake and how things tend to be secured here. But yeah, the reason why I'm bringing this up is because 21 shares, which isn't BlackRock, by the way. I think people got confused here. BlackRock is iShares. 21 shares is another ETH ETF provider, not just ETH, they do other ETFs as well. It's not BlackRock, but 21 shares basically put forward a proposal to amend their ETF to be able to, their ETH ETF to be able to stake that ETH. And we expect this to happen across all of the ETH ETFs. And honestly, I won't get I'm excited about it, and I think it's going to happen. And I've been saying it's going to happen since the administration changed. But I'm not going to say it's like 100%, exciting or very exciting until like BlackRock and Fidelity do it, because they're the ones that have the most power here. They're the ones that bring in the most amount of money. They're the ones stacking the most amount of ETH here. And I understand people have their reservations about this and their concerns about this, but I think I've addressed those already, so I'm not going to go over them again. But we're going to have to see what this looks like. How long does it take to get approved? Are all of them going to get approved at once? Are BlackRock and Fidelity going to come later? Or are they going to do it now? Are they going to be new ETFs, or are they going to be amendments to existing ones? And what I mean by that is, for example, BlackRock going to launch a separate staked ETH ETF and just have their normal spot ETH ETF as it is? Or are they going to have their spot ETH ETF combined with their staked ETH ETF? So it's basically just one ETF. And then essentially what they say to customers is that you can either stake this ETH and get this yield, or you can just have it as normal kind of ETH without the yield on it. And I think that's probably going to be what happens, but we'll have to see how that shakes out there. But anyway, staked ETH ETFs are definitely coming. All right, some spicy AllCoreDev updates. So Nixo here posted a tweet and gave a TLDR as to why there was some spice in the latest AllCoreDevs call. Essentially, there has been a soft decision made to aim for a Fusaka spec freeze in about a month. And in layman's terms, this basically means that the Fusaka, I guess, like overall kind of design and what EIPs would be included in Fusaka is going to get frozen in a month, which means that developers, aka the client implementers, can basically work on just implementing all of the EIPs and getting that ready for mainnet. So if we do have a spec freeze in a month, that really ups the odds of Fusaka going live before the end of the year to pretty high. I would say like 70-80%. It goes up pretty high because of the fact that once the spec is frozen, it can be unfrozen, but normally it's frozen because the core developers and researchers are confident and this is what's going into the upgrade. And right now, I think it's just PeerDAS and EOF that's going into Fusaka, but maybe Fossil makes it in. Who knows? We'll have to see if that makes it in. But yeah, if there is a spec freeze in a month, that means that the client developers will have, so in a month, right? Let's just put a date on this. It's mid-March. Let's say that the devs work on it until like August and start doing testnets then. That's still like a while away. They do testnets in August. We'll get a mainnet by November sort of thing. If we're talking about it like that, maybe even in October. So it seems like the Fusaka fast follow fork might actually happen, and we might actually be changing core development to be targeting 6-month forks instead of yearly forks, which would be really, really awesome. That's a 50% reduction, right? That's a halving in time of doing hard forks on Ethereum. And yes, the forks are smaller, but I think there's obviously been a shift in priorities around what to include in forks. Obviously, PeerDAS is the thing that everyone wants like right now because it allows us to massively scale blobs and then obviously keep iterating and improving on that. Keep getting blob count increases in, keep doing, L1 gas limit increases, stuff like that. So that's something that came out of this AllCoreDevs call. And there was also a lot of discussion around EOF again on this call, and it was a bit contentious. As you guys know, as I've mentioned plenty of times on the Refuel, EOF is a contentious thing. It seems at this point that it is like still a 50-50 chance whether it's going to get in or not. I think we'll know for sure if the Fusaka spec freezes and EOF is in it. I think a lot of core developers seem indifferent on it. It's like they don't want it, but they don't not want it. It's like, okay, if it happens, it happens sort of thing. I don't know enough about it to argue either side of things. I've just been following along with some of the discussions that I've seen on Twitter. It is a very kind of low-level thing. It's not something that's necessarily user-facing, so it's not something that users really need to pay attention to, but there are good arguments on both sides here. So we'll have to see how that all shakes out there. All right, so the Ethereum Foundation has deployed a bunch of their ETH into DeFi as promised. Now, I think this is really cool for a number of reasons. First reason is that obviously the Ethereum Foundation using DeFi directly is better than them selling their ETH. So if they just put their ETH into what they've done here, Aave, Compound, and Spark, and then borrow against that ETH instead of selling it, that is better on a number of different fronts, like such as I guess the vibes front, right, the sentiment front. Also the fact that they can hold this ETH, and let's say ETH doubles or triples from here, they didn't have to sell their ETH now. They were able to borrow against it, and then they can just pay back that debt by selling ETH at 2 times or 3x from here, or earn money some other way from that. Maybe earning some yield from ETH staking and then selling the rewards and then paying the debt of this, of the stablecoins that they borrow off with the yield that they get from staking their ETH. There's a lot of different ways they can do it here, and I'm sure that the EF Treasury is on top of this. But the other bigger reason why I think this is a big deal is because a lot of people don't realize this, but the Ethereum Foundation doesn't have any more money than what they currently have. I know that's a bit of a weird way of describing it, but they have about $1 billion between their ETH, or maybe it's a bit more, less now because ETH went down, but between their ETH and their fiat holdings, they have $800 million to $1 billion left, right? Now, the reason why I say that that's all they've got is because they can't do another ICO. They can't do like a private sale or anything like that because the Ethereum Foundation can't print more ETH, right? They can't print more ETH from the network because that's just not the way it works. The Ethereum network, if there was like an EIP put in place to say, hey, we want to print 10% more ETH, and then the Ethereum Foundation put this forward and said, we want to print 10% more ETH, and then we're going to sell it, and that's going to fund Ethereum development, that just would never fly for many obvious reasons. I'm not going to go into all of them. So really the EF only has that money that they currently have. Yes, if ETH goes 2x from here, they have 2x the amount of dollars that they did before, 3x, 4x, whatever it is. If ETH goes to 10k, it's like 4x, right? From here, basically the Ethereum Foundation now has what, 3 to point, I guess that's like $3.5 billion or something like that, which means that if they haven't sold any ETH that they hold right now. So obviously them putting their ETH ETH into DeFi instead of selling it now is a good long-term treasury management strategy for them as well. But the real thing here is that because this is the only money that the EF has, them putting it into DeFi and maybe not staking it is way less risky, but them putting it into DeFi is a very strong signal that they're to like everyone, I think, in the Ethereum community, of that one, the DeFi protocols that they put this ETH into, they consider to be the safest on Ethereum. Now, we know, being plugged in, we know that these are the safest on Ethereum. Aave, I would argue, is the safest DeFi app on Ethereum, besides maybe Uniswap, but Uniswap is obviously a DEX, whereas Aave is a lending market. Spark probably second most secure, and then Compound maybe third. But at the same time, there's not much between them. They're all pretty secure and pretty reliable and have weathered many storms over the years. That's the main thing I think that the EF was looking for there. But still, they put this ETH at risk. As I said, this is all they've got, right? Now, it isn't all their ETH. It's like, what is it? I'm doing the quick math here. It's like 50,000 ETH. They have like 300,000 ETH or something like that, or a bit more than that, or something. So it's still a huge chunk of their ETH, but they've put this at risk. And they're doing this, obviously, for their own benefit, obviously for sentiment reasons, people wanting to see them do this and stuff like that. But it's still a risk that they're taking here. So I think that that's worth noting here as well. But the bigger deal, I guess, like from a treasury management standpoint, is the fact that they can hold on to this ETH without having to sell it and essentially be able to fund their operations, and then they're basically making an implicit bet on ETH, the asset. And this is something that the community has wanted the Ethereum Foundation to do as well. They basically said the Ethereum Foundation needs to care more about the ETH, the asset. It cares a lot about Ethereum, the network, but we don't really feel they care that much about ETH, the asset, which I think is a bit silly, because I think the Ethereum Foundation has a lot of people that do care about ETH, the asset, but as an entity themselves, maybe they haven't signaled it as much. This is a pretty big signal, because it basically means that they're saying, well, we think that this ETH is going to be worth more in the future. That's why we're borrowing against it today. And that means that we're incentivized to make sure that ETH is worth more in the future. So they're incentivized to deliver value to ETH, the asset, which, as I said, I think is the biggest deal here about this move. So this is a lot of stuff that you wouldn't have seen, or would maybe not even thought about just seeing this tweet here. But that's what I took from this move. And that's why I think it's a pretty big deal. And the community loves it. The community loves seeing the Ethereum Foundation get more involved with the, I guess, quote unquote, trenches, even though I don't think anyone would consider Aave or Compound or Spark to be the trenches, but for the EF, it is. Anything on chain, I think for people that haven't been on chain before, can be considered that. But we'll have to see what else the EF does here. They are still exploring staking. I think I saw Vitalik mention it. They're still exploring staking. If I had to guess, they would probably do a split between solo staking, staking with Lido, staking with Rocket Pool, and that's maybe about it. I don't know who else they would really stake with, because the other protocols haven't been around for very long. As you guys know, there are a ton of LSTs out there and LRTs out there, but I don't know if any of them would be safe and secure enough for the Ethereum Foundation. And I've covered a bunch of them before, like Swell, Puffer, EtherFi. I just don't think they've been battle tested enough. I think Lido definitely has, Rocket Pool 100% has, and Rocket Pool would be better for decentralization of the network, of course, and would be more aligned with Ethereum values. But Lido's community staking module is also pretty good, so if the EF was part of that, that would be really cool. But solo staking is obviously the gold standard here, and the EF has no issue solo staking, considering they have all this ETH, they have the in-house, they have the people in-house who built, well, not all of them, but a lot of people in-house who built Ethereum Proof of Stake. So them solo staking is a no-brainer, but if they also want to support the wider staking ecosystem, it would make a lot of sense for them to go with Lido, Rocket Pool, maybe a tiny amount into these other protocols, just to show that, hey, we want to support you guys are valued, we're doing this, but we also need you to understand that you haven't been around as long, so let's start small and kind of scale it up from there. All right, the Ethereum Foundation research team will be hosting an Reddit AMA on February 25th at 2 p.m. UTC. And you can submit your questions with this Google Docs form. So I think this is maybe a better way of doing it, because it allows the researchers to collect the questions in a more scalable way. So you can go check that out. I'll link it in the YouTube description below. But these are always a very good time. These AMAs don't happen that often. I don't know if it's once a year or once every 6 months, but when they do, you essentially have a gold mine of information to sift through that will keep you busy for a very long time about what is happening within the Ethereum Foundation when it comes to research on the protocol. Now, as I've said before on the Refuel, and I've said this many times, I feel like a broken record at this point, the research within Ethereum can vary in timelines from something that could ship in 3 months to something that could ship in 5 years. There is a huge variance here in timelines, because there is a huge variance in the research being done at the Ethereum Foundation, but also outside of it. But these AMAs are a good way to basically get a feel for what the Ethereum Foundation research team is working on, how they're thinking about things, what the timelines look like for things, and also just reinvigorate your bullish energy on Ethereum. I will probably cover like the top answers from this AMA once it happens. As I said, it's on Feb 25th, so it's about 11 days from now. But yeah, if you want to submit your own questions, you can. I'll link that form in the YouTube description below for you to do so. All right, so moving on to something from inside the simulation.eth. He has built, or she, I don't know their gender here, have built a built on Ethereum logo generator, essentially. So you can go to ethereumisforbuilders.com and you can add your own artwork to this built on Ethereum logo that was created the other week. And I think I showed this on the Refuel, and you can deploy it on multiple different networks. You can have it on mainnet, or sorry, you can create it, I should say, on a mainnet, base, Arbitrum, Optimism, or on any custom networks you can set here as well, which is very, very cool. You can also edit things like the border width, for example, so you can see how it changes the border width here. You can change the colors. You can see if you want it in landscape or in line or in portrait. And as I said, you can add your own artwork here. So I'm going to add my own artwork quickly from desktop. If it loads up here, you can't see this right now on my screen, but like I'm going to add this in. My favorite ETH Pepe. I love the ETH Pepe, but he's in there now, and then I can just click download, and then away we go with that there. So this is a really good tool. Honestly, it's just like so simple to use, and you know, huge kudos to Inside the Simulation for building this. And I would love to see this kind of shown on Twitter. I might actually post this ETH Pepe one on Twitter because I think it's so cool. But I just think this tool is really awesome, and I'm just so inspired by all the work that people have put into these kind of logo designs since I first kind of teased the Powered by Ethereum kind of branding. People have just taken and ran with it, and that is really the Ethereum spirit, to just take something and run with it and just do it. And I think we have like a very nice variance in stuff that's been happening in built on Ethereum badges, in Powered by Ethereum badges, and I think it's just cool that the community came out in a big way for this. There's still more work being done. There's still that competition on Joke Race that's being run, that will run through Denver, I believe, through ETH Denver, I believe. But even stuff like this is just, you know, above and beyond, I guess, the Call of Duty here, which is really awesome to see. So I'm definitely going to download this and post it on Twitter, I think, after I finish recording this episode here. But you can go check this out for yourself. I'll link it in the YouTube description below. But also, just another thanks to Inside the Simulation for building this. This was really awesome to see. All right, one of the hottest topics, if not the hottest topic in the Ethereum ecosystem over the last 6 months has been interoperability of L2s. Now, as you guys know, Josh Rudolph here from the Ethereum Foundation has stepped up in a really big way to get L2 interoperability to the next level. So he's been hosting this L2 interoperability call with a bunch of different builders across all of the different teams in the Ethereum ecosystem, not just L2 teams, but also infrastructure teams, wallet teams, and beyond. You can actually see a lot of the representation that was had by the Twitter accounts that have been tagged here. I'll link this in the YouTube description below for you to check out, and you can also check out the highlights from the latest call. Now, I'm not going to cover every call going forward, but I did want to just focus on one dot point that Josh put here on his recap, where he said, interoperability is iterative with lots of stuff already shipping. Now, this is really important because there seems to be maybe a little bit of a belief in the ecosystem right now that L2 interoperability is this switch that can just be turned on. That's not how it works. It's not like we're building towards, you know, in 6 months' time, we're going to build all this all this infrastructure over 6 months, and then in 6 months' time, we're going to switch on, put a switch on, and then suddenly the whole ecosystem is interoperable, and suddenly everything feels like one chain again, or within Ethereum. No, that's not how it works. Unfortunately, I mean, I wish it worked like that, but that's just not how it works. It's iterative. And what Josh means by this, I believe, and I guess like the context that I can give around this is that, as I've said before, there are different layers that you can do interoperability on. You can do it at the protocol layer. You can do it at the interface layer. You can do it at the wallet layer. So there is a difference between interfaces and wallets, I think. Interfaces essentially allow you to connect an existing wallet to it in order to interact with things, whereas wallets themselves are obviously the wallet here. But then there are even further layers of abstraction like that, where you essentially have an interface and wallet in one, which is something like a Coinbase, right? Not Coinbase wallet, not on Base, but Coinbase itself, where essentially if you go to Coinbase today and you buy ETH, you can stake through Coinbase, but you can do that all on the Coinbase exchange. You don't have to go on chain, and they have the wallet for you. It's not your keys, not your coins, but they host the wallet for you. They manage it all for you, and they also manage the on-chain stuff you're doing in the background there. So there are different types of interoperability here. And they range from centralized to decentralized. They range from all the different interfaces at the protocol layer, at the layer 2 layer, and so on and so forth. So that's why it's iterative, because each team and each project will be shipping their own interoperability efforts, and you'll be able to use which one you want. The holy grail, obviously, is to make the protocol layer as interoperable as possible, the L2 protocols themselves as interoperable as possible, just at that kind of base layer there, and then all of that gets inherited by the interfaces, by the wallets, and then you get to the point where you're like, okay, well, it may be like a switch is turned on. Maybe, let's just say, if you want that switch being turned on feeling, let's just say you stop using anything on-chain today, you come back in a year, and then you see how things are. I can guarantee, maybe not guarantee, but I'm pretty certain that in a year's time, and maybe even shorter than that, you're going to have an experience with the top wallets, the top interfaces, where essentially you won't have to worry about bridging, you won't have to worry about different chains, you won't have to worry about having assets on multiple chains. You'll just be able to do everything from a single interface, and it will feel like you're part of one Ethereum again. You won't have to hear about some app that's on Base, but all your funds are on Arbitrum, so you have to bridge. You can be like, well, I don't care if my assets are here, and that app's there, I can use my assets wherever I want. I can interact with this app, and it's just a one click away. There's no more approved transactions. As you guys know, account abstraction is also in parallel being developed here. We have ERP 7702 going live with Pectra, along with all of the other stuff happening at the interface and wallet level for account abstraction and stuff like that. But interoperability abstraction, abstracting away all of that, that's going to happen very, very soon. And Josh, as I said, is leading the charge here, but he made a really important point in his recap where he said that he's iterative. It is not a light switch turn on kind of moment. It is iterative. You're going to feel it as more and more time goes on. And I think that's the better way to approach it as well, because it means it's more of a bottoms up approach rather than a top down approach, which is the Ethereum spirit anyway. All right, a massive announcement from Arbitrum. So as you guys know, they've been working on this BoLD permissionless validation mechanism for their fault proof system here. And now, starting today, I believe, or the other day, anyone can now defend Arbitrum by being part of this fault proof system, or essentially submitting fault proofs if they think that fraud is going on, or faults are going on, I should say, on the Arbitrum networks. Now, I believe, I don't know if this is live for, no, it's live for just Arbitrum 1. So far, it's going to be live on other Arbitrum networks, I think, as time goes on. But this means that they're closer to stage 2 decentralization here. And if you actually go to the L2Beat website, which I will, I think it's already been updated to reflect essentially what Arbitrum is here. Yeah, Arbitrum only has one yellow left in their risk rosette pie here. So they've got 4 greens, 1 yellow. That is awesome, because as you can see from the other L2s, Base is in second place here. They have just 1 red in their exit window. That means they're still stage 0, by the way. So you can see how strict the stages are here. And then OP mainnet basically has the same thing, because it's running the same, it's running the OP stack there. But then the rest of them have a lot of reds and yellows and oranges in them, at least the rest of the ones that have lots of TVL. Some of them are all green, but they've only got $50 million of TVL, so it's not really relevant here. So Arbitrum is really leading the charge here and getting all of those green things filled. And honestly, they're going to get stage 2 this year. Like, no doubt about it at this point. And that means that they are a fully decentralized rollup, as decentralized as you can get as a rollup that exists as a layer 2 rather than a native rollup. Native rollups, I think, take it a step further. But yeah, that's the holy grail. That's what we've been working towards for years now. And honestly, I'm really happy to see that Arbitrum will probably be the first one to get there. And the reason is because they've actually been pushing on this for a long time. They've been pushing harder than I think any other L2 ecosystem out there. And they've really stuck to this, even in the face of getting ridiculed for this. Basically, people saying, well, if you were centralized, you could move faster and you shouldn't be focusing so much on that stuff. You need to build up your ecosystem. Well, they've done both, right? Like Arbitrum, if you actually go to the L2Beat website here, the main page, their TVL is still ahead of Base, even after all the growth that Base has had. Yes, their I guess like user operations are lower, but I've never really liked, as you guys know, user operations or TPS as like a raw metric. And neither do I like TVL as a raw metric. But the thing is that Arbitrum has grown a really healthy DeFi ecosystem. If you look at all the metrics there, their TVL is a reflection of that, I think, and also their user user activity, or TPS, or user operations, I should say, are also reflective of that, because you would expect less user operations and less transactions per second on these DeFi chains that are being used with more capital, so being used for things like money markets and being used to lend and borrow and stuff like that, rather than something that is maybe used by more of the speculative crowd. Like, I know Base has been appealing to the meme coin crowd, so they're definitely doing more transactions because they're in and out of positions constantly. So there is a little bit of a difference between ecosystems here, but it's also not a one-to-one comparison, because these things measure transactions and user operations differently depending on which construction you're looking at here. But that's besides the point that I wanted to make, was that the fact that Arbitrum 1 will reach stage 2 this year. I hope that Base and the rest of the OP stack can still reach stage 1 this year. It's not actually much for them to do that. They basically have only red in the exit window. Exit window part of the pie, which is a pretty important one, to be fair. That's why they're not even stage 1 yet, because the exit window is essentially a window for users to exit in case of an unwanted regular update, since the contracts are instantly upgradable. So it's essentially that escape hatch that we talk about, and it really is. I mean, if you were to talk about what matters most on an L2, like, that is probably at the top of the list. So that's why it's so strict here. Whereas Arbitrum has a yellow exit window right now, which means that they've got an exit window of 7 days. So under normal circumstances, if they do an upgrade outside of the Security Council, so if they just do a normal upgrade, then you have 7 days to exit before that upgrade was to go live. Whereas with the Security Council, there is no delay. So essentially what happens is that right now, if the Security Council came together, they could instantly upgrade the network to do any number of things. So that's why it's yellow. But as we know, or as I've explained before, the reason why this exists is because the Security Council is there for critical bugs. You can't wait 7 days to fix a critical bug, because by that point, all manner of crap could have happened, right? But still, they're almost there. They're almost at stage 2. So I'm super excited. They've set the bar here. Congrats to Arbitrum for delivering BoLD, and I'm excited to see that stage 2, I guess, like, badge being hit in the near future. Speaking of L2s, Unichain is now live on mainnet. I tried this out, I think, on a test transaction I did a couple of days ago or something like that. It's fast, it's cheap, it's what I expect from L2s. I was really excited that it was basically a very similar experience to the other L2s there, because that's what I guess I expect these days. It's kind of table stakes there. And they're also, I think there was a lot of questions about what they're prioritizing and kind of what their differentiation is here. Well, essentially, they're prioritizing decentralization from day one. They're trying to be as decentralized as possible from the get-go. They're trying to do that with fast and low fees. They're trying to do cross-chain liquidity with intents and things like that. And they also want to basically have a network of validators up as quickly as possible, where people can stake their Uni tokens and essentially get fee revenue sharing from Unichain here. Now, Unichain is currently listed on L2Beat as well. You can actually go in here. It's using the same stack, like the OP stack that Base and OP mainnet use. So it has the same assumptions here. It's got the 4 greens in the pie, but the exit window is still red. Their TVL is still low because they just launched. It's about 25 million. You can expect that to go up as they begin to incentivize things as well. I do think they're going to incentivize things with potential token rewards here, but as they begin to get more, I guess, like apps live on the network, because Unichain isn't an app-specific chain, it's also just a generalized chain here. As they get more distribution via the Uniswap wallet, via the Uniswap website, I'm sure they're going to be pushing people to use Unichain and say, hey, you can get better experience doing this. There's going to be more activity here. But it does bring up the discussion around, I guess, like generalized chains versus app chains again, and people being like, we already have enough generalized chains, why do we need more, sort of thing. And look, I don't even think that's an argument worth having or a debate worth having. I think in the end, as I mentioned before, a lot of these things are just going to be natively interoperable with each other. Users are going to be able to just use their assets wherever they are, essentially. And they're going to be able to use the apps on whatever chain they're on. And then really I think it becomes a game where the chains with the most activity will be the ones that land the best apps, essentially. So, for example, let's say that the lines are blurred and now interop is quote unquote fixed. You can now use an app that's deployed on Arbitrum 1 from any of the other L2s. Maybe not any of the other L2s, but let's say the ones that use blobs, right? The rollups that use blobs, let's just say they're stage 1 as well, at least stage 1. So let's say that's the line that has now been blurred. So essentially what happens is that the app where the app is dictates where the activity goes. So if the app's on Arbitrum 1 is getting all the activity. Even though the assets are on these other chains, Arbitrum 1 is the chain that's getting the activity. And you would say, well, why wouldn't this app deploy anywhere else? It's like, maybe they would, but there's no guarantee that the users are going to use the app on those other chains. They'll just maybe use it on Arbitrum 1 for different reasons. Maybe because it's cheaper and faster somehow, or maybe because it's more secure, because they trust it more. There are different reasons here, but the lines definitely do get blurred. So I do think that the generalized chains will eventually, like, not die out, but like, it's going to be like the same as it was with the L1s. Most of them just go nowhere. And I think that the app specific chains are going to become more and more important as interoperability gets fixed and solved, because that means that there's really no reason to deploy, not no reason, but like, there's more and more reason for you to deploy an app specific chain than it is to deploy your app on a generalized chain. I guess the biggest reasons for both is, the reason why you would deploy your app on an existing generalized chain is because that's where all the money and users already are. But the biggest reason you would deploy your app as an app-specific chain is because you want to capture any value that your app generates. You don't want to bleed that value to the generalized chain. So there are trade-offs here. There are certain apps that can get big enough and then spin out as their own app chain, but then the ecosystem that they launched on has an opportunity to make sure that that app spins out as a chain that was built on the OP stack, for example, or the Arbitrum stack, for example, the ZK Sync stack. So even though they launched as on the generalized chain, if they want to launch their app chain, then launching it on the stack is even better, because then the whole collective kind of, I guess, benefits from that, right? But those are my general thoughts there on that. But anyway, as I said, good to see Unichain live now. You can go check it out for yourself. You can just go to the Uniswap website and you can find it there. All right, so OpenSea finally announced, after many years of people waiting for this here, that their token is coming. So the token is named C, and there are a few things to know about this. So historical OpenSea usage, not just recent activity, will be an important ingredient for the airdrop that everyone expects to get here. The claim process will be simple and accessible. US users welcome. That's interesting, right? I'll get back to that in a sec. OpenSea said here that they're focused on long-term sustainability and supporting a healthy, enduring community. Yeah, I mean, cool. So is every other foundation in crypto. No details on timing yet. We're taking the learnings from this space and getting it right. So note on that, there is no airdrop checker or claimer yet, as far as I know. So do not fall for any of the scams, because I'm sure there's going to be plenty of them there. But back to that US users welcome point. This is a huge deal, guys, because as you guys know, for a long time now, US people were barred from airdrops for no reason, basically. It wasn't illegal to get an airdrop, but they were barred from airdrops because of the really hostile regulatory environment, in particular from the SEC. And OpenSea, I think, didn't even do their token until now because of that. They weren't even willing to risk it. They also, I believe, received a Wells notice or potentially a lawsuit, I can't remember, from the SEC, or they're probably both. But anyway, US users welcome. So one of the biggest apps and one of the most well-known apps on Ethereum and within crypto has basically said that we're comfortable enough and we feel comfortable enough now doing airdrops to US people. You guys can do that too. So now, and thankfully for all the US people, you guys will now be able to access these airdrops. Any team not airdropping to US users is going to basically be, I guess, blacklisted by everyone, because they're going to be like, well, there's no reason not to do this anymore. You know, OpenSea did it. Why can't you? So I think that that's going to become a trend going forward, which is awesome. I think that this is another signal that the regulatory environment has just completely changed. It's literally a 180, and we expected this. This isn't a surprise to anyone, I think, because the expectation obviously was that if Trump won, if the Republicans won, this would happen, because not only do they like crypto and they talk a lot about crypto, but we knew guaranteed that Gary Gensler would be fired, and we knew that there really couldn't be anyone else that was worse than Gary Gensler put in place, especially not by a Republican administration. There was always a small chance that they could be, but it wasn't really a realistic chance. And then since then, the momentum has been building around the fact that, okay, well, Hester Pierce is now in charge of the crypto part of the SEC, and the new SEC chair is pro-crypto, right? And then the CFTC chair, the new one, is Brian Quintez, who is posting on Farcaster. Like, you're just getting all of these really bullish crypto people in politics, in the regulatory environment, in positions of power, and that is exactly why you're seeing this. And there is more stuff coming, guys. I read some tweets and some threads about the fact that there is a decision on Coinbase's lawsuit coming up. You could imagine that the SEC just drops the suit against Coinbase, or just like lets it run out and go stale. And once we see how they treat Coinbase's case, we can basically have confirmation that that's the way they're going to treat all the other cases here. And we have even further confirmation that they're not going to be going after all these companies in the US now with frivolous lawsuits. So again, a massive regulatory boon here, a massive regulatory win here. And I really don't think the market is pricing this in, guys. I really think that the market is really underpricing the impact of this. And I think it's because they've been burned for quite a while. I think that's because there's other things that at play rather than just the crypto native stuff when it comes to markets. But I do truly think that we're in a new era here for at least the next kind of like 2 years. I know that the midterms can stand to change things in I guess like the political sphere, but there's no guarantee that the Dems are going to win in the midterms. Maybe the Republicans win again. Like, I don't know. You guys know I don't really pay much attention to US politics. I try to limit the attention I pay there. I try to just pay attention when it involves crypto. But when it comes to the SEC chair, even if the Democrats were to win the midterms, or were to win, I guess, like the House back or something like that, I don't think, from my understanding, it would affect the SEC chair or the regulatory environment, the CFTC chair or anything. So we very likely have at least 4 years of this, which is just really bullish to me. Just really, really bullish. So we'll see how the market, hopefully prices that in as time goes on here. But as I've said before, I think that Ethereum definitely stands to benefit the most from a friendly regulatory environment. I've been hearing so much in the background from places like Etherealize, which they're going to be announcing stuff as they come. I said this in the Daily Gwei Discord channel today, but essentially they don't want to announce anything unless they've got something to announce. So they don't want to tease anything. They don't want to say, oh, things are going well, without actually having something to show for it, which I think is a good approach. That's all happening, and there's just so much other stuff happening in the background when it comes to the regulatory front there, and basically making sure that Ethereum is part of those conversations, and of course onboarding the traditional finance institutions and all those corporates that we want to onboard as well. But on that note, I think that's going to be it for today's episode. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all on Monday. Thanks everyone.